Warner Brothers Discovery is the latest media giant to report earnings, announcing it lost 1.8 million subscribers across its platforms in the second quarter following the launch of Max. The company also reported a $3 million loss in its streaming segment after seeing a $50 million profit in the first quarter. Rich Greenfield, LightShed partner, is joining us now. Rich, it's good to see you here. So give us sort of your big picture take, first of all, on these numbers.
Look, they are delivering on what they said in terms of free cash flow. There's no doubt David Zaslav and team are getting the cash out of this business. They've dramatically restructured, radically reduced costs. They are generating far more cash flow than investors expected when this transaction closed last year. I think the challenge and what you're seeing in terms of the weighing on the stock today is the fact that the advertising environment is just not picking up. You know, you had a lot of media companies, legacy media companies early in the year talking about sort of a second half recovery and that you'd see a ramp in advertising or an improvement. And it's improving, but off of a much lower base. And you're still looking at pretty sizable declines in advertising, whether we're talking NBC Universal, whether we're talking Warner Brothers Discovery. All of these companies are seeing the TV ad market just be terrible, recession or not.
Well, and it doesn't help if you're losing subscribers, right? I mean, like, how is Max? Is Max competitive?
Look, I wouldn't read too much into that.
Okay.
No, but I wouldn't read too much into that. Part of that is, remember, there's Discovery Plus subscribers in that number, and they folded Discovery Plus into Max. So when HBO Max became Max, it now includes Discovery Plus, and there were subscribers who took both services. So I think some attrition is not unexpected. They're still, in terms of the size of Max relative to its peer group, Max is doing just fine. So the stock is not down because Max lost a little subscribers. I think if anything, the Max rebrand has gone pretty well. I think the service works better. I mean, if you've tried downloading a show on Max versus the old HBO, the new interface is far better. I think this is more about they guided to the bottom end of their, they had a range of 11 and 11.5 billion of EBITDA. They guided to the bottom end of that range. They took down sort of their advertising guidance for the rest of the calendar year. I think that's sort of what's weighing on WBD as well as the sector at large, because the headwinds facing Warner Brothers are no different than the headwinds facing Disney. I mean, you saw Iger on CNBC the other day. This whole sector is facing very significant headwinds.
Rich, it got a little bit of a mention in the release from Warner Brothers today. Of course, the strike that we're seeing in Hollywood right now, impacts maybe mixed in the second quarter for a lot of these companies. How are you thinking about that longer term for the space?
Look, I'm just worried the strike is going to last until October, November. I mean, I don't sense any real progress. Yes, talks are going to theoretically restart tomorrow with the writers, but I think you've got a long road ahead. And from everyone I talk to in Hollywood, I think people are sort of prepared that we may not be fully back in action until sometime in November, even towards Thanksgiving. And that's going to be very disruptive to the business of Hollywood in Q4. And look, it also just drives consumers to watch more catalog, to watch more overseas content, to watch more YouTube. Like, this is not the right time. There's probably never a good time for a strike, to be honest. But I think given the alternatives the consumer has today versus what they might have had 10 and 20 years ago, this is far more devastating to this industry than I think both sides realize.
And I wonder how you think these different companies are navigating it. I guess what I want to ask about is leadership of the big media companies and studios, whether it's Iger, whether it's Zaslav, whether it's Backish, like, have these, and whether it's the strike or the slowing ad market, how are these guys doing? Are they doing a good job navigating this?
Look, all of these companies were too late to embrace streaming, right? There's no doubt they waited too long to go to streaming. They saw what Netflix was doing, and they jumped on the bandwagon. Disney was the one who really started it with Disney Plus, but then everyone else jumped on it. Now they're all realizing that their core business, which is cable network, broadcast and cable networks, they're all realizing those businesses are in secular revenue decline. Advertising's going down. Affiliates, which is the fees paid by cable and satellite operators to cable networks, those fees are now going down. So the whole top line of this industry is in secular decline, and sports rights and costs keep going up. And I think that's what's spooking investors. It's why Iger's talking about spinning off linear TV, needing partners for ESPN. Like this is the sort of the sickness that's sort of plaguing this entire legacy media industry. And so you say who's leading? I think all of these executives have been caught a little flat-footed. I think, Zaslav's probably been one of the most upfront of the challenges and recognizing, hey, we got to cut this aggressively. And you see that in the free cash flow. I mean, there's no doubt they are deleveraging faster than investors expected because he realized there is no growth story left in the linear business.
Yeah, and Rich, I wanted to ask a little bit about the sports rights picture, maybe a little bit smaller for Warner than some of their other peers, but just where that fits in, because as an outsider, I see the salary cap going up for all the leagues, I see the rights projections going way higher, and yet you see the stocks and what's going on, kind of the dynamic you're talking about, it doesn't really add up to me.
Look, you're seeing it in local, right? The local sports side is imploding. If you look at Diamond Sports, which went bankrupt, it was owned by Sinclair Broadcasting. There's no doubt that local sports has imploded, and you're seeing all of the after effects of that right now. The question is going to be, is the local sports problem going to play out in national over the next few years? And look, it's possible it doesn't, because you have digital players like Apple and Amazon and even Google that have come in, Google Sunday Ticket, Amazon's bought, Thursday Night Football, you're seeing Apple do MLS and probably do Pac-12 now. But look, all signs point to if the way you pay for sports is advertising and affiliate fees, meaning the cable and satellite fees, if those are the way you pay for sports rights and those fees are going down, it is very hard to comprehend how sports rights keep going up. And that's going to be the challenge, and why the leagues so desperately need the digital players to step in, because I don't think these legacy media companies are going to be able to keep paying more for rights as their revenues go down.
So, Rich, circling back around to Warner Brothers specifically, Zaslav on the call was asked about sports. He was asked about other things like the international push and licensing content. There's whatever of these media companies you're talking about, there's a lot of different facets, right? What does he need to be prioritizing for Warner Brothers right now?
Look, I think the question is, how much sports does he really need? Can he get out of, he pays $1 billion a year for the NBA. Is there a way to create a smaller package where he, reduces costs or at least holds costs? I mean, I think that's what investors are trying to understand. You heard a couple of the questions about sports. Like, I think everyone's trying to understand, it's great that they're cutting costs right now. How much control of the cost structure do they have looking out over the next few years as these sports rights come up for bid? And can they resist? I think they're really going to look to Zaslav and hold him to it. Can he resist overspending on sports rights given what's happening on the top line?
It's a good question. We'll see. A little suspense here. Rich Greenfield, thank you so much. Always great to catch up with you. LightShed Partners.
Thanks for having me.
Thank you.